Last time we saw the markets go haywire, there were 5 assets that absolutely exploded. We aren't talking small wins, we're talking about huge gains, where normal people won big. I'm looking at the past crashes like 2008 GFC, the 2020 pandemic crash, and I believe we need to be prepared because an economic downturn is around the corner, and this is where winners are made. And my goal is to comfortably come out of this in the 6-figure range, and I want to show you my thinking. So quick recap of what's going on right now. Oil prices are currently dragging a lot of assets down right now, as well as a stronger US dollar. So when the dollar is stronger and oil is up, it means inflation is higher and businesses tend to struggle more. Markets are moving pretty sideways right now and things are very uncertain. And it feels like things could get a lot worse if Trump actually launches a full invasion on Iran. The oil prices would explode and the economic downturn would probably happen. And a lot of people are fearful. They're sitting in cash and they're just on the side and unsure. And for some people, it is their first time going through something crazy where there's economic uncertainty like this one. And especially if you're in your 20s, this may be a new experience for you. However, this is also where real wealth transfers happen. So it is a season unlike anything. And it is when assets go on sale, that is where big wins happen. And the people who bought the assets were the ones who won, especially in the periods like 2001, 2008, and 2020. So here are the 5 assets which have won in the past and I think will win again. Not financial advice, do your own research. So number 1 is gold, silver, and Bitcoin. I've banded these 3 together because they fall under the same reason why. Whenever downturns happen, one thing you can guarantee is that governments print more to try and reinflate the economy again. To give you a couple of examples, we look at the 2008-2009 global financial crisis. $3.5 trillion were printed. That's huge. And 2020 was much worse. And they can't help themselves. They go back to it over and over again. It's all they know. When in trouble, print and try and get out of it. So when dollars get devalued, you need what is known as sound money, real money that can't be printed and can't be faked. Gold and silver have proved over and over again that when things like this happen, they perform. Looking at past data, we can see that initially they have slight downturns when things are getting nervy. Gold going down 30%, silver going down by as much as 50%. But the rebound they have once the money printing has been complete is massive. We're talking 400% with silver in the past. The reason being that they have huge history as real money. We're talking thousands and thousands of years. So when a dollar comes under question and it's printed, these assets go up. Bitcoin also serves a similar purpose. And to be clear, I'm not saying we will never use the dollar again and it will collapse. I just know it is losing purchasing power. That's not new news. Bitcoin serves as sound money. With a limited supply of 21 million, it provides some certainty in that it can hold its value. And I believe Bitcoin itself, it won't act as a currency, but simply as a store of value like gold and silver. This is because it has a growing demand, more people are interested in it, but a capped supply. It's mathematically impossible for every US millionaire or global millionaires to own one Bitcoin. I mean, look at the numbers for yourself. 21 million Bitcoin and 58 million global millionaires, it just doesn't add up. The math doesn't make. That's why I put these 3 together. These assets are very similar in how they're going to act during this period of time. However, all of them have been volatile lately. Bitcoin went from 120k down to nearly 70k, and silver's done very similar, going from 120 down to as low as getting into the 60s. Gold has also been pretty similar, although a lot more stable. But this is something I continue to DCA into, dollar cost average, and I believe this will create some serious winners because history proves it over and over again. Number 2 is tech index funds. This is something I've started getting into and have introduced into my portfolio. The future is in technology. We all know this. And I've been getting exposure to this through index funds like the QQQ. And I've been just using this to buy and hold for the long term. I'm thinking more decades down the line when I'm holding this. So what's great about this is you're not picking one tech stock and you're not going into single tech stock risk. You're buying a basket of the biggest tech companies in the world all at once. So if the triple Q, it's an exchange traded fund, or an ETF we call it, and it tracks the NASDAQ 100. What that means is it just tracks the top 100 non-financial companies on the NASDAQ. And when you buy one share of this, you own a piece of all the companies in there. And what you're owning is you're owning companies like Apple, like Microsoft, Nvidia, Amazon. These are top tech companies. And instead of betting on one winner, you're betting on the entire tech ecosystem to win. But the reality is, I believe these stocks are massively overvalued. Their prices simply don't match their earnings anymore. I'm looking at the data behind this, and I'm using the price to earnings ratio, which basically tells you, does the price of the stock match the amount of money that they're creating? And right now we're definitely higher than usual. We're at 33, which is above the 22 average. And I can use this to gauge basically whether it's a good deal or not. And the other issue is these companies tend to get hit really hard in an economic downturn. I mean, the NASDAQ went down as far as 55% in some of these bad periods. But the reality is this: after an economic downturn, do you really think companies like Microsoft, like Nvidia, and Apple are going to disappear? They're going to keep winning and do what they do best. And I'll be honest, I don't see a world where these guys don't win. And after downturns, this is where the results were made. The NASDAQ really has the ability to bounce back really quickly, and history proves it. We look at 2009, the recovery was almost instant. We're seeing rapid returns, as well as the pandemic, where we're getting returns as high as 50%. So for that reason, it is something that I'm looking to pick up on a discount. I'm still buying into it slowly, but I'm not overcommitting. I'm not putting massive amounts into it yet. But if things go funny and if there is a downturn that happens, I will be buying a lot of the triple Q. Technology has now become the cornerstone of business. For consumers like us, it is also very important. So it's something I'm keeping a massive eye on. Number 3 is cash. Now, I know what you're thinking. We just talked about before in point 1, how much money printing there is. So why would you hold cash? In times like this, where things are uncertain, cash gives you so many more options. And there are 2 main reasons behind this. Firstly, if you want to buy these assets at a discount, as I mentioned before, how are you going to be able to do it? Without cash, you're relying on your income alone to come through and then be able to buy these assets. However, cash can be deployed very quickly, and when opportunities come up, this is when you need to have it ready. And then if an economic downturn happens, you can buy these investments. We look at some of the top players like Warren Buffett. He's currently sitting on his biggest cash position to date of $381 billion. He's calling it the war chest. And Warren Buffett himself considers cash to be like oxygen, but it's not a good asset. It's just something you need to have ready on the side. Secondly, it provides some protection. Everyone talks about the opportunity economic crashes bring, but sadly, not enough people are talking about the really bad stuff. People lose jobs, people lose homes, and it is a really tough time. I always think back to that scene in The Big Short where Brad Pitt explains to these 2 young investors that every 1% unemployment goes up, 40,000 people die. We need to remember that economic downturns are awful times, and we need to be prepared for the unexpected. Cash supports you during this time. Say you're unemployed for 2 to 3 months, having the cash available to cover basic living expenses is critical. Unfortunately, I myself don't have a full business yet, so this is something I need to be prepared for. So I've personally increased the cash in my portfolio up to around 25%. And I've gone further with this, and I've gone deep. I don't trust banks, and we know this in 2008 what happened. You couldn't pull money out of the bank when things went wrong. There was a run on the banks, which basically means that everyone pulled their money out of the banks, and the banks didn't have the cash available. So we're now beginning to see this actually happen in private credit funds, and things are getting a bit funny with restricted withdrawals. So this is something I'm keeping an eye on. The 5 biggest names in finance just restricted withdrawals from their private credit funds. We're talking BlackRock, that's a massive player, and Morgan Stanley. And this is massive players who've just decided to say, no, you're not allowed to touch your money anymore. So I want to have some physical cash as well, and I want guarantees that my money will be ready when things go funny. And I personally do like the extra security. This is a very doomsday scenario that I'm pointing out, but I don't think it's impossible. However, I do want to clarify something. I haven't panic sold at all. I'm just not overcommitting when I invest. I invest what I can afford to lose, and when I invest, it stays for the long term. I haven't stopped investing either, and I still invest monthly as per normal. I keep my expenses as low as possible so I can invest as much as I can. I've just increased the amount of cash I'm holding and begun to prepare. Number 4 is your self-education and your skills. This, in my opinion, is arguably the most important on this list. Your ability to earn income, your ability to have a financial IQ and invest comes back to your skills. And the fact that you're watching this means you're investing in yourself and your knowledge. And we talked about cash before, but with skills, this is how you create money, and this is the engine that actually drives everything. And I believe that crashes is also where the biggest change in skills are required in the market and where things begin to change. So I'll give you a couple of examples. So the dot-com crash of 2000 saw a massive rise in tech skills. We saw winners in people that became software engineers, like that built infrastructure and built data systems. The builders were the ones that won. During 2008, the GFC, it was the digital marketers that won, data analysts, entrepreneurs who built online businesses, and system automators. And then came the COVID-19 pandemic, where overnight everything just went online and we had to live off that. There was content creation, it was remote work tools, it was e-commerce, and again, it was freelancing and digital services that won. So your ability to adapt and change to an environment is critical. And my prediction is that in the case of an economic downturn, we will see new jobs created in the space of AI. And we're talking about AI operators, the new office workers. These are people who know how to use AI to do the work of 5 to 10 people. We're talking about ideas like prompt engineers, people who helped with prompting AI, automated workflows in emails, in reporting, in operations, and replacing manual tasks with AI systems. Companies are going to demand that. People who can connect to tools and eliminate manual work, like by using Zapier, like using AI, CRM automations, and back-end systems. So me personally, myself, I'm focusing on data and how I can connect into AI systems with company data systems using tools like Fabric, and then being able to sell these tools to multiple clients. The data needs to be structured in a way that companies can implement AI into their businesses, and it's just something that I'm personally focusing on. But it's your skills and it's your ability to offer these that's so vital. And number 5, to put it all together and to offer all this, you need to have a personal business. And like it or not, you think of the really wealthy people that either have businesses, they operate, or they own businesses. This is because it produces real cash flow. This is the engine that's going to run everything. With continued cash flow, you can pump your money into businesses, you can continue to invest, and it drives everything else. So I'm in the middle of building my freelance business as a Power BI developer, as well as I continue to build content like I am right now, and to build a personal brand. My final goal is to have a system where I can produce cash flow, and through the cash flow, I can invest regularly buying top-end assets. So as I adjust my skills, I will need to focus on new stuff like marketing, which has been a big focus of mine through cold email campaigns to bring in new clients. But the other thing I love is I love the control. With stock markets, with investing, I'm relying on other people to achieve my personal wealth. With my personal business, it is me doing the work and I have full control. I have control of the leverage as well. Through a business, I potentially don't just control my time, I also control other people's time, and I can leverage this on a bigger scale. With content, I leverage through subscribers. One video can be seen many times, and once you've posted that one video, people can watch it while you're doing other stuff. So this is something I continue to work on every single day, and one of my biggest desires right now is to be able to build a cash flow business. So to summarize this all together, the assets that win during these times based on research is sound money through gold, silver, and Bitcoin, index funds in the tech sector, cash to deploy when things go down, your skills and your ability to adjust, and your personal business. Based on my research, this is what matter, and this is what people are going to be focusing on. If you enjoyed this video, please let me know. If you got any questions, put in the comments below and I'll be happy to help. I've been responding to a lot of comments and I'll continue to do that. I can't wait to see you in another video.